Hi, good evening, everyone. Welcome back to the channel. So I wanted to review the dividend portfolio again after the last couple of weeks of market fluctuations. We seem to be doing a little bit better. One interesting note, my TQQQ options were down today, despite the fact that the NASDAQ and the TQQQ was up. So that's interesting for sure. But I want to go over the actual income per month. And again, I consider this, like I said, this is kind of like a play account. I do this uh, to get these dividends in this account so that they're there in case I ever needed to actually like live off of them, hence the channel name. So let's go ahead and share my Schwab screen over here with all the investment income. So it's been dropping. Got it down to like 52,000 projected right now, but year to date we've gotten 35,000 so far, and we're on month number 8. So far we've received the bulk of the dividends that we're going to receive in this account for August. We got most of them last week, so most of these are coming within the first like week of the month. I haven't really staggered with some of these others, like with Roundhill and stuff like that, but I might actually invest in Roundhill. I'm starting to really like their strategy. I cover that one every week. Um, so this is what it's showing. We've got like 4 months left at this point, and it's now saying like 4,000 per month because it's based on like the trailing dividends from the last months. So actually, July was the highest month ever for the portfolio for dividend returns or for dividend income. So if we were to just take that and multiply that number by 12, that would actually be 57,800. So if we maintain this, which I don't see why we wouldn't, we only had 2 months that were outliers: February, which was a short month, and June, which was lower for some reason. But other than that, we've been consistently at like 4,500, 4,725 over here in January, which was our previously best month of the portfolio. 4,500 here, 4,500 here, lower here. Then we were back in business here, 4,818. Let's just for fun, let's look at when I started doing this a year ago. You can see we were only getting like $200 in dividends, maybe 300. Now and then May we jumped up to 1,100. Then this is when I invested it in Tesla for the first time, and then by July 3,600. So really, since last July, the portfolio has been making quite a bit in dividends. Last August, 4,250. September fell because a lot of these funds cut their dividends and stuff, and then by October, 4,000, 3,700 almost. By December, almost 4,500. So those were the last 6 months of 2023. And then this is where we are here. So, we seem to keep on. If we were to do a trend line, with the exception of 2 months, most of them are averaging right here where this trend line is, like 4,500. So, and we've still got between the two accounts 17,000 remaining. So we've got 17 of you on just eating this up. No comments yet. I guess you all are just so mesmerized. But anyway, so like I like to remind you all, I am not in this to like max out like everything I have in one account and to max out my dividends and stuff like that. Like I'm happy with this. Like if I had to, this is there like to fall back on. And right now I don't use the money. I'm actually, and I know it's tax inefficient and all that, but I use the dividends to actually wheel into growth stocks, which is what I've been doing. And I'll go over all those buys. So my strategy here, if you want to call it that, because this account, I don't take this account as seriously as like my 401ks or some of my others, which are all in, growth funds and stuff. But this one, um, if I was to go over like the whole history of this account, this was at a different broker before, and I've taken money out of this account over the years, so it's not like at its peak value. Um, this would be, if I never took any money out, this would be probably worth like 300,000 by now. Um, but with the dividends, what I'm doing, and I'll show you all what I'm buying. I've used them to buy. I've scooped up a ton of Chipotle after the split. I've scooped up a bunch of Nvidia. AT&T is one of my original holdings, which I feel dumb having it because I mean, it pays a great dividend. But back in the day, before we had, and I say back in the day, this was like maybe 7 or 8 years ago, before we had all these fancy ETFs, AT&T was like one of the top like dividend paying stocks. So that's how I got suckered into that one. But of course, the price, like in 2016, the price of AT&T was like $45 a share. It's never gotten back to that, and I don't know if we'll ever see those days again. At this point, AT&T stock would have to like double in value, and of course, it had that crazy split like with Warner Brothers. So, and then I bought some high tide. This is what I use my dividend income on because I'm not using it to live on. Let's see here. We got Fun Guy. What's up? Night Owls. Who's William Malakuski? My 401k is boring, all 2050. That's a problem. I'm glad you mentioned that. So let the coach you up here for a second. To this point here, we're going to take a little side detour here. Okay, so this is a problem, I would say. Being in a target date fund, you will probably notice, and I can perfectly prescribe the problem. You're going to say over the last 3 to 4 years that your 401k hasn't grown that much, and you're wondering why. And I know you're going to say that because I've had several people in your same boat tell me this, and I know exactly what the issue is. It's that you're in the target date fund. Here's the thing with the target date funds, and fortunately, I figured this out early. Like I figured this out like the first year I started a 401k, because I was in the similar. They had me in like the 2050 or 2055 or whatever, and I'm like looking at the returns, and I'm seeing 8% versus S&P, Nasdaq, Russell, all doing 30 to 35%. And I'm like, wait a minute. If I look at the funds, if I play portfolio manager for myself, I could be getting a 35% rate of return versus an 8% return. So you're going to see the light bulbs about to go off here in a minute. Um, yeah, the target date funds suck by comparison. You'll be lucky if you're doing like 8% a year. There's only one year that I know of that they outperformed, and that was 2022, and that was when the whole market was down. Otherwise, I can tell you for 4 years from like 2019. Oh no, don't give me this. This isn't fear. What's the saying? The only thing we have to fear is fear itself. Okay, so I'm glad you found me because I'm going to break you of this mindset. I love it when people say this because there was a time I thought like this too. So you said, I'm afraid to switch to S&P now. If S&P crashes, 2050 will drop less, and that would be a good time to switch it, maybe. Right. Well, the government could collapse. The dollar could lose its value, which it has lost 50% of. It could lose the other 50. All these arbitrary things could happen, right? So, okay, here's the point. The S&P 500 in the last 10 years, 9 of those 10 years, it's up. One of those 10 years, maybe 2 of those 10 years, it's down. So guess what? If it's up 8 out of 10 of those years, that's an 80% probability that it's up. There are going to be years that it's down. I don't dispute that at all. But you can't base, well, I mean, you do you, as they say, but in my opinion, you can't base your investing philosophy on the idea or the notion that the market may crash. Yeah, all these things are possible. There's inherent risks in everything. Um, but the thing about it is, okay, so when you're looking over the last 5 years, and you don't want to look on a FOMO standpoint, like, well, it's here now. I do this too, by the way. That's why it took me a year to get into NVIDIA. So you don't want to look at, oh, it's at like this peak. I don't want to, no, no, no. They call it dollar cost average, DCA, for a reason. So moral of the story, when I got out of this target date fund, and I'm not saying this to brag, like I've made plenty of mistakes myself, trust me. But when I got out of this target date fund, I got into S&P large cap, which is mostly like the big tech companies, the Mag 7 and all of that, company stock. And I did some small caps at the time, but I just had gotten out of those because they may have 1 or 2 years that they're good, but typically they consistently underperform. Um, on average. But S&P, Nasdaq, large cap, can't go wrong with those. I was for like 4 or 5 years in a row, I was crushing it with like 30% returns on average. When you max out a 401k, which I know we just had this discussion Friday about the downsides of that, but if you're maxing it out for the tax benefit, you're getting employer matching and all that. And then you start getting into the right funds that are doing like 30% a year on average. They may have that 1 year that they're down, but when they're doing like 30%, like you're going to grow that account fast. So to balance it out, have separate Roth and brokerage with a bunch. Okay, well, so you're doing good there. Well, see, like my accounts here, like my Roth and my brokerage are more risky stuff. But anyway, so in 2022, like I'm not gonna lie, like that year sucked. Like I lost the equivalent of a full year salary in the account, but what it made last year more than made up for what it lost the year before. But other than that, and I know we've taken a huge detour here, but other than that, um, the account has done great. It's just been on fire. No, I wouldn't be excited about a target date fund at all. They're boring. Invest in CDs if you're going to invest in a target date fund. But I digress. So let's get back to the portfolio here. Okay, so what I do, I like to wheel my dividends into growth investing. So I got some high tie here. You see, I've paired up my positions. So I've got a lot of high tie. I've got Sprouts, which is doing really well, actually. I've still got some JP Morgan stock. I bought some Starbucks. These are all new buys, by the way. High tie, SFM. This one I've had. Starbucks is new. Tesla, I actually used some of my Tesla dividend to buy into Tesla stock. Palantir, I've had quite a while. Manulife, I got into recently. MSTR, I got in for the split. SMCI, I got 3 shares of it now. Block, I've had for some time. I've actually used the dividends from SQY to buy Block. Dollar General, I've had. These others, I've had. Microsoft, I just bought 2 shares. Can't go wrong with that. I had FOMO with this one for a while, by the way. I should have been in this one years ago, but I've kept watching it run up. So anyway, and I'm happy with it now. Like I say, 10 years from now, I'm confident this will be way higher, and I'll probably just keep buying more shares. And then the others here, I've got some garbage ones here. Intel is okay, and then you see the others. The bulk of the dividends, though, come from. Oh, see, it's lower because for some reason there's a data issue with Coney. But anyway, so like Tesla, SQY, all these others here, you can see where we've got quite the dividends over here. So that's pretty much the annual dividends I'm getting, and these are the options I'm in right now. Apple should have sold it when I was at an $8,000 gain. I'm waiting for it to run back up. TQQQ, this was like a big lottery ticket for me. I don't advise trying this at home, but for me, I'm banking on a big run up in the Nasdaq, which could totally not happen, but it also could happen. So I actually used my dividends for these because I'm thinking the Nasdaq, if it has a good like couple weeks, these will be worth a fortune. And then some TNA, I'm making the same gamble with the small cap index that's going to come back. So that is pretty much the dividend portfolio mixed in with a lesson there about picking index investments versus target date funds. So anyway, I didn't want to go too long. Thank you all for watching. Let's see what Fun Guy says here. Yeah, have some fun and balance out of the boring stuff. Uh, you're an INTC bag holder. Yeah, me too. Willing to hold it forever. Yeah, why not? It's a good, solid company. Anyway, well, thank you all for tuning in. I got to run now, but like, comment, and subscribe. Join Discord, and we'll see you all tomorrow. Take care. Bye. And let's end it.